Alright, this is a record for the 18th of December 2023. We are now approaching the second last week of the year. Without further ado, let's get started. So, I haven't charted, I don't know what's going on. I mean, I haven't really planned it out yet, so it's going to be more of a slower pace, just um as we go along with it. We saw gold dumping, pulling back into this level at 2036 and then dumping again. We accumulated orders here, dumped here, and then we found basically a discount on which buyer then bought and rallied gold back up and breaking this previous high. Now what I think is that we are as we're approaching, the Q4 and December, gold generally has a rally, and we could already see from the beginning, the Q4, gold has been moving up 20%, right? Now we broke the high, um, so this could be a potential low, higher high, and lower high somewhere. So where could it be? If we draw, we have this level, 50, that could possibly be, or we have 61 and the break of retest of this candle. So what would be the higher chance one? Personally, it's very hard to tell. Um, if I have to pin it on one particular spot, I would say 50, simply because it has strong rejections historically, recent history. So we have 3, 4 levels around here that could be exploited. Something like this is what I'm looking at. Okay. It's a big zone. It can happen anywhere here. So it's best to be cautious, and we trade in alignment with silver. Silver, I also charted this. This is a 38 retracement. It was. So 38 retracement, we have 50. All coming along, you know. So it is for both metal pair that this is not the cleanest zone, and to really execute, I'm going to need further information, and that's going to come from basically US 500 and US Tech. Which I'll chart later. But yeah, gonna need a bit of correlation. So onto USD we are seeing a bearish market structure being formed and um, respected and maintained. Right now, last week, we have made a retest into this level at 141.7, right? 75. So this level seems to be the extreme, um, where there's the discount, and we are now seeing a rally, a profit taking, I would assume. So we close above the wick, okay? And I think this is important because it shows that we don't have enough of a selling pressure to break below. What I'm likely going to expect is Monday, Tuesday, we're going to see a rally to the upside. And mind you, we have fundamentals up. Just the JPY rate. That's going to be big on Tuesday. Okay, so Tuesday we're definitely going to see some sort of big movement. I don't know where. Can't possibly assume. What I think is attractive right now is the 50, mainly because there is a potential break and retest, an EMA, and it is generally a strong looking zone. So that to me is what I'm looking at right now. Okay, now if that really do happen, I'm gonna need some sort of alignment with Euro JPY because this is a grade C setup. It's not a key level, so I'm gonna need a bit more confluence to help me believe that this is going to be a higher odds of success kind of trade. And for Euro JPY, I think the same thing applies. We closed above the previous low. In fact, much worse than USD JPY, right? Because USD JPY were contesting and trading below for a period of time. Now, because of that, we are seeing, I think, a likelier, sorry, a likelihood of a longer rally, and we're most likely, in my opinion, going to break this higher low at 157.37. If we do, I think that this level will offer a very nice trade opportunity, especially if we breach this 50. That's just going to further reinforce trade idea for me. What could potentially happen as well is we retest from here, but we will see. I'm not too sure what the conditions in the market are going to be. But if this do happen, then we do have this at around 260 pips away, and above that we have 100 pip entry above, using this, all these rejections as a confluence for our short thesis, at least for this position. As for Euro USD, currently we had a strong pullback. I did take, but I closed full at I think 35 pips. We made another 50 pips down, which is fascinating because I did not expect that, but we made a pullback and we're currently, I think, sitting around at like a 50% retracement. 38. The recent push up is very clean, and it does make it very difficult to gauge if there's going to be any resistance to the downside. Generally speaking, when there is a clean move up, it is usually accompanied by a clean move down because the order is very directional. And so when you clear the orders on the opposite direction, generally there's not much resistance because there's not a lot of orders accumulated in a specific price area. So, this is happening. Seeing a very clean stroke down. Could potentially see a break of this level. Right now, what I see is we could potentially have a long here. This is potentially a key level. It is a key level for me because we have reaction here. Okay, we have reactions here. I push price down a lot. 170 pips. We have reactions here. We have reactions here, here, break and retest going up. It's a decent level. I think this is a key level. We could really use this. This is a grade B setup because we need alignment to make it grade A. That's in my book. This is a profit-taking area for sure. So this is a high probability trade that I want to take. I don't really care about this position. Really depends on how this might be used as a confluence for gold instead. So we will see how that goes. As for GBP USD, I'm just using this as a confluence for USD. I have kind of charted out already what I see. We do have a profit-taking area here with 200 SMA. This could potentially be a very beautiful trade to take. If your USD setup isn't that great, I probably will opt in for the GBP USD. But as it stands right now, I'm more biased toward Euro USD because that's the pair that I trade, and I generally only use this for charting, for alignment. And GBP JPY, statistically, I checked, I'm not the most profitable, and so I'm, stepping back from this pair. Currently using it as a alignment for Euro USD, I mean Euro JPY and USD JPY. So that's that. Currently, nothing interesting. We do potentially have a rejection, a pullback at 177.15 or 2 or 0.2. Very dependent on the situation. Now, S&P 500, we have seen a push up and we've basically respected. We pulled back 15 pip, not nearly enough. I think we actually did 30 pip. No, we did not do 30 pip pullback. So what could happen is we could continue to see a further rally into, in my opinion, the most we're going to see is 4,807. So as a 70 pip, 80 pip away, we do very likely that we can take a short lower. Okay, and that'll probably be the same for this tech. So far, that's that. Nothing much. For Nikkei, we have seen Nikkei basically correlating with the recent week. See the pull back down and then pull back up, right? Currently, Nikkei is, I think, sitting at 38 retracement. I do want to see it come further below to tap into this trend line. If it does tap into the trend line, we can expect a buy on the JPY, and that could correlate with either of these positions. And that would be very interesting to take. But until then, we'll see. Not putting much hope into these final weeks. We've seen a lot of, I've seen a lot of fuckery, at least at the end of year. So I'm gonna trade very carefully. Gonna take only good setups. That's about it.